Hey, what's up guys? It's Ezekiel Chiu here. So, real talk. Have you ever felt like the market was like personally out to get you? Like when you enter a trade, right? The moment once you enter, let's say you want to buy up, the moment once you enter, boom, trend flips. Right? And then you're left staring at the screen and like, man, what just happened? Okay, so today I'm gonna fix that, right? I'm gonna show you exactly how to tell when the trend is about like done before it wrecks your trade. So there's no fancy indicators, no guesswork, just clear, actionable signs that actually work. So if you are tired of getting trapped at always entering at the worst possible moment, by the end of this video, right, you will know exactly how to spot the end of the trend and then even flip it into a profitable reversal trade. Ready? Let's go. Okay, so before we get into the good stuff, let's get one thing straight. What even is a trend? I mean, before we get into how to spot the end of trend, we gotta first understand what a trend is. Okay, so you might have heard of the phrase, the trend is your friend, but only until it ends. Okay, so exactly is a trend, right? A trend is the overall direction of the market. More specifically, it refers to how the price action moves from the highest to the lowest points, right? So let's dive into the three main trends that you need to know. The first one, uptrend, downtrend, sideways trend. These are the three main trends. Pretty straightforward, right? I mean, the first one, uptrend. In an uptrend, there are what? There are higher highs and higher lows. That means what? That means the buyers are in control of the market during this period in time. Alright, so if you take a closer look, you'll notice that each top is higher than the previous one, and each bottom is also higher than the last one. Right? So in an uptrend tends to continue in the same direction as long as this pattern holds. Okay, so next, the downtrend. Right? In a downtrend, we will see what? Lower highs and lower lows. That means what? That means the sellers are now dominating the market. Okay, so if we take a closer look, you will observe that each top is lower than the previous top and each bottom is lower than the last one. So a downtrend will likely persist as long as this pattern continues. Last one, the sideways market. When the market isn't trending, it doesn't move up, it doesn't move down, it moves what? Sideways. So what? Neither side is in control. It's like a what? A bar fight with no winner. Okay, so in this type of movement, you will notice that the tops and the bottoms are roughly equal. So creating what is known as a range. So that's when the market is in a state of consolidation and prices move within a specific range. I mean, it sounds simple, right? But here's the problem. Every trend ends. And if you don't know when that is happening, I mean, you're going to set yourself up to lose like hard, right? So let's fix that, right? Let's fix that. Now, I don't care how strong a trend looks. Every single one eventually runs out of steam. Every single one, correct? So the key is spotting it before the market slaps you in the face, right? And then reverse. So here are the 4 dead giveaway that a trend is about to reverse. Okay, number 1, price hits a major structure level. So this is like your first red flag. So if price is approaching a strong resistance in an uptrend or support in a downtrend, you gotta pay attention. When trading, say, on the 4-hour time frame, you use the daily time frame to identify key price structures like major support or resistance level. right? So for example, if the 4-hour chart is in an uptrend, check if the price is approaching a higher time frame resistance on the daily chart itself. Okay, so similarly, for an 8-hour time frame, depending on brokers, depending on platform that you use, some have the 8-hour time frame. If you are using the 8-hour time frame, pretty much it's a 4-hour plus 4-hour time frame, right? That's where you use the weekly chart as your reference for a broader price structure. So this is a very simple approach, right? But it helps you to align your trades with significant levels on the higher time frame. Okay, so here's the rule of the thumb. Check the next higher time frame. So if you're trading a 4-hour, look at the daily chart. If you're trading the 1 hour, look at the 4-hour chart. If you're trading the 5-minute, look at the 15-minute charts. So if price is heading to, crashing into a major level on the higher time frame, that is a big sign that the party is almost over. Number 2, the trend starts looking like weak, like really weak. Okay, so here's something that most traders, they ignore. The size of the candles. Is that you? So in a strong trend, the trending candles are what? They are big, they are confident. And then the pullbacks, they are small, they are kind of hesitant. It's like unsure, that kind of bars, right? So the bars sometimes give you a feeling of the market itself. But when a trend starts dying, the trending candles, they get smaller. The retracement candles, they start to get bigger. So this is literally like the market telling you, hey, I'm getting tired, right? I might turn around soon. I need a breather. Okay, so, but here's the thing. Most traders, they don't listen at all. So they keep on buying at the top, right? The market is going up. I keep going to buy. I'm going to buy. Or they keep shorting at the bottom. The market is going. I'm going to sell. And they wonder why they are getting destroyed. So don't be that guy. Number 3, identifying what? Trend exhaustion through weakening retracements. So in an uptrend, you will typically see what? Strong bullish candles, right? Forming higher highs, higher lows, higher highs, higher lows. But as the trend weakens, these bullish candles, they start shrinking, right? Showing that the buyers are losing momentum. At the same time, you want to look at the retracement move. This is when the market pulls back against the trend. If the retracement candles start getting bigger, this means the sellers are stepping in with more strength. So in summary, the shrinking trending candles equals weakening trend. Growing retracement candles gets bigger, right? It means what? Increasing selling pressure. So when both of these happen together in the same chart, this is a very strong clue that the trend may be reversing soon. Next, number 4, the market breaks structure. So this is important, right? If you ignore everything else, at least pay attention to this. So as long as the market is making higher highs and higher lows, the uptrend is still good. If the market is making lower highs and lower lows, the downtrend is intact. But when the price breaks the last major swing low in an uptrend, the last major swing low, or a swing high in a downtrend, this is not just a red flag. This is like the fire alarm going off. That's when you know the market is kind of like shifting gears already. So I want you to consider these 4 things to identify all these potential trend reversals and trend change, right? So many of these 4 factors, they come together. A lot of times they come together. So when that happens, the odds of reversal are so much higher. Alright, so let me give you an example. In an uptrend, price suddenly drops below the last swing low. That means what? Game over, right? In a downtrend, when price rips above the last swing high, that's the time to flip to be bullish. So remember the 4 signs. First, price reaches and heads into a major resistance zone in the higher time frame. In the higher time frame. So take a look at this. This is the 4-hour time frame. So what? The goal now is to determine if the price is approaching a higher time frame resistance, such as a key resistance level in what time frame? The daily time frame. So let me show you, right? In order to do this, I'm going to split the chart up like this. Now here, the daily time frame chart and the 4-hour time frame chart are displayed, correct? So this section of the chart, it represents what? The daily time frame. The other focuses on the 4-hour time frame for comparison. So now, on the daily time frame, when you zoom out slightly, it shows what? That the price have reached the previous support zone that may now act as resistance. This area has been repeatedly tested as support before price broke below it, and then we tested it as resistance. So now price have returned to the same level again. So the point on this chart is the same as the point here. They represent the same area. So next, we look at the trending move to see if it's getting smaller. So if you focus on this part, you will notice what? The trend starts strong with what? Strong bullish candles. But as it continues, the candles, what? It gets smaller and smaller, showing a weakening trend. Alright, so if you notice how the trend starts to weaken over time. So next, pay attention to the retracement move. The trending candles, they start what? Shrinking, while the retracement candles starts getting bigger. So when price what? Falls below the swing low, it creates a lower high and a lower low. This is what we call the break of structure. And it's one of the most powerful reversal signals that you will see. Alright, so now at this point, the market is likely to reverse downwards. So while nothing is trading is certain, right? The chances of a downward reversal is going to be high. It's likely going to be more than 50%. So now let's take a look at another example. If you take a look at this chart, think about how could we have anticipated the downtrend was ending and a new uptrend is about to begin. So now I'm going to split the chart into two sections again, right, to show you the bigger picture. So as you zoom out, both points matches the 4-hour and the daily time frame. Okay, so now on the daily time frame, price has reached what? This support area, right? So on the daily time frame, this area what? Has reached a previous resistance, which could now act as a support level. So the first criteria is met, that what? Price is near the higher time frame support level. Alright, so next, let's focus on the trending move. So this is the trending move, right? So you notice how the candles are shrinking. While they are large here, they became much smaller, right? Indicating what? A need for more selling pressure. Okay, so we are now looking for the retracement move. Are the buyers starting to take control? So the retracement here is weak, all right? But a slight pullback followed by what? A more significant move. That indicates some strength. So the buyers are stepping in and the retracement range is increasing. Okay, learning something. So next, when you see this is the start of a new trend. It's inverted. So the trending move now becomes a retracement move, right? First off, the trending move right now becomes a retracement move, and now the retracement move will now become the trending move. Okay, so this has now become the trending move, where else previously in the downtrend it is now the retracement move. Okay, so now their roles will change. Buyers start to come in. So you notice what? How big this candle is, right? It is significantly larger, correct? If you compare to the earlier trending move, lower down and smaller. So finally, what we are looking for is the break of structure, which occurs when price move above this high. So now, there is a pattern of higher highs and higher lows, right? So this marks the end of the downtrend, showing how 4 of these factors now aligning. In order for you to spot trend reversals effectively, you got to focus on what? The 4 main factors. Number 1, price is nearing the higher time frame structure, right? You're clear of that, right? I've showed that many times, right? So you got to align the current time frame with the higher time frame, right? Example, the 4 hours to the daily, right? Check that the price is nearing key support or resistance level. Number 2, shrinking trending move candles. When the candles in the main trend gets smaller, it signals what? A weakening of momentum, right? Number 3, strengthening of retracement move candles. So all these strong pullbacks, and the pullbacks, the candles, they start to get bigger and bigger. It means what? That this retracement is likely going to take over to become a main trend. Number 4, the break of structure. So the best confirmation is a break of structure, right? From the higher highs to lower lows. This confirms a trend reversal. You can be all 4 combined together. If there is, it's like a perfect thing. But if there are 2 or 3 of them, of all these signals combined together at one time, this largely increases the profitability or the probability of this trade reversing or the trend is ending. All right, so there you go, right? Now you know exactly when to stay out from entering a trade that is likely going to turn the other way, and how to also spot the perfect moment to catch the reversal downwards or upwards. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.